Let's turn now to Commodity in Chief, where we focus on one executive in the commodity world, and today it's Jeremy Baines from Neste. First, let's take a closer look at his company.
The world needs to spend $50 trillion by 2050 to cut emissions enough to meet the Paris Agreement's goal of curbing global warming. Here's where the world should spend it. Hydrogen, gas to fuel power generation, industrials, cars, and heat homes. Price tag, $19.4 trillion. EVs, cars make up 7% of greenhouse gas emissions. Price tag, $11 trillion. Carbon capture and storage, cost about $700 million to capture 1 million tons of carbon a year. Price tag, if you add storage, $2.5 trillion. Renewables, needs to deliver about 80% of global power by 2050. Price tag, $14 trillion. And biofuels, fuel produced from waste and residue like cooking oil and food animal waste. Price tag, $2.7 trillion. Enter Neste, a Finnish company trying to win with biofuels. Its renewable unit makes up just 20% of revenue, but almost 70% of adjusted operating income. And it sees its next growth opportunity as planes. CO2 emissions from aviation is on the rise, and there's pressure to tax jet fuel, and biofuel adoption is slow. Costs are high, and there is limited supply. Neste is trying to change that. It has 15 MOUs with airlines and airports and is expanding its facility in Singapore to increase production to 340 million gallons by mid-2022. The company sees jet fuel growing 2 to 3% a year, and Neste wants to be at the clean fuel center of that.
I recently caught up with Jeremy Baines and asked how the process worked.
It starts with the feedstock. You need to be able to source the right feedstock at competitive prices. You need to be able to pre-treat it in such a way that you can actually put it into our renewable diesel refineries. And then once you have the renewable diesel, it needs to go to the right market. You need to sell it in the right way, it needs to be transported. So there's a very long supply chain, if you want, that needs to be managed. And that's really where Neste has been able to excel over the last couple of years, is to really, in a sense, to crack that formula, how to do that in an efficient manner. And that's what has really been driving the margins on the renewable side.
So when you walk it forward, what's the growth rate look like? Are you going to grow at the same kind of rate you have in the past couple years here in the U.S.? And if so, where are the pockets of demand?
So the renewable business, I think today for Neste, there's probably more demand than there's supply. We have announced our Singapore expansion. We're looking to have that online in 2022. That will give us the ability to grow certain markets further. And the US is one of those markets that we're looking at.
What's the next fuel we're going to all have to pay attention to?
Well, I think sustainable aviation fuel is clearly an important fuel that's coming along. Today there's very little of that available. The aviation industry has got a very strong commitment to decarbonize, and sustainable aviation fuel will form an important part of that. So that to us is one important one. We're also looking at the circular economy concepts, like on recycled plastic, how that can be used either to convert it into conventional road fuels, or even brought back to new feed for new plastics. So there are lots of exciting spaces in the renewable business to look at.
When you talk about aviation fuel, do the planes have to be fitted with a different kind of fuel tank for that to happen?
Well, I think that's one of the real key things about sustainable aviation fuel, is that it works in existing infrastructure. It works in existing engines. There's no additional investment that needs to be made. The only thing you need to do is drop it into the tank and off you fly.
So what's the holdup?
Well, this is a nascent industry. It is still growing. 34 million gallons is still a very small amount. Neste, or like our competitors, we don't have the economics of scale.
Talk a little bit about where all of this sits within the broader energy transition.
I think it's part of the solution. If you look at road transportation, there's a big need for electrification in the light duty, maybe the medium duty, but it's in the harder to abate industries, like the aviation fuel, like heavy duty road transportation, that we need to have these sustainable liquid renewable fuels. They are the only ones today providing the energy density to really compete. And SAF is the only fuel that will power planes and reduce emissions.